This is your weekly prep for January 7th, the week of 2024. We had an awesome year last year. We did a nice recap of the Discord with the Tier 3. A lot of profits made. Some folks well on their way to seven-figure trading. Some folks that are on their way to another six-figure month. So we're starting the year off really, really nice. Let's get to it. We're going to talk about our key levels, market moving data, market moving events, what the Discord, what the community is talking and saying about the training and how this community has been helping people. It's unlike any other. Are you ready? All right, let's get it. All right, so as stated, January 7th, the week of January 7th, here's your weekly prep for the week. Let's talk about what we can look forward to and get right to it. All right, so last year's action, I want to encourage you to go over to our podcast channel and listen to our latest podcast. It'll be dropped Monday, midday, how to become a comeback king or queen. Just search through the channel there. You'll find it where we interview one of our traders who lost some money in another Discord, then found my trading system, found me, and was able to crush this thing and take it to another level. You don't want to miss that interview there. So do yourself a favor. That's a nice recap, a nice year-end update on how I've helped people, how I'm helping people, and how you can be next. All right. So we're going to talk about the sentiment for the week, what we can look forward to. We're going to talk about the levels of trade plan. We're going to talk about what people are saying about my community and the training. More importantly, we're going to talk about what you have at your disposal in order to crush this thing, what tools and indicators that do you have. And then we're going to talk about free and paid training. And I'm going to send you on your way so that we can get to trading come tomorrow. So let's get to it. All right. So this week, we really only have CPI and PPI. That's all we're looking at. That's all we care about. That's all we're looking forward to this week. There are some notable events along the way, but that will be the big daddy of them all. And we'll talk about what investors and what day traders care about as well as we go through it. Okay. So Monday, we've got 3 p.m. consumer credit. These are our major data events that can move the market. Why do we care about that? The VVP trading system is based on 3 things: volume, volatility, price action. You need to understand not just these items here and maybe a loose definition, but you need to understand their impact to the market and you need to plan for it. That's how you trade effectively as far as day trading is concerned. Tuesday, we got trade deficit at 8:30. We're watching those numbers as well. Wednesday, wholesale inventories coming out. And then Thursday and Friday, really, that's what it's all about. Backside of the week, CPI, core CPI, year-over-year CPI, PPI, core PPI, year-over-year. That is the major gauge. Obviously, right, monetary policy, investors, even the financial sector, which we'll talk about later, they really care about these numbers. These numbers will impact growth in the economy. These numbers will impact debt for the economy, and these numbers will impact rates. Okay. So this week, there can be more Fed members on the docket appearing and talking, but really I'm only concerning myself with Williams speaking Wednesday, 3:15, seeing what he's got to say about the market and the status of any future rate hikes. Investors are looking at his tonality. They want to understand if he has any outlying feelings on the direction of interest rates. If he still feels confident that we'll get to that 2% target. And we're all watching that as well. Okay. So here's what to watch for. Well, this week is all about big banks. Big bank earnings kicks off in this earnings season. So after reporting strong results for the third quarter, investors will be watching earnings from several big banks, seeking evidence of the economic weakness that executives signaled could be coming. So we got Chase, we got Bank of America, Wells Fargo, Bank of New York, Mellon. We've got all of these are scheduled to Wells Fargo. If I didn't mention that, all of these are scheduled to report earnings on Friday. Each delivered better than expected results last quarter, and mostly it was bolstered by high interest rates. However, several financial service executives warned that parts of their businesses were facing stress. The economic challenges were coming just all around, hitting the banking sector, and it's going to come down the pipeline. I'd say Q3, Q4, you'll see it more. All right. So Jamie Dimon warned that U.S. consumers and businesses could face even higher interest rates. I agree with that, as inflation risk remain elevated. Now, he has to really say that, but in banking, he loves that because, it's just, if you're keeping your finger on the pulse of the credit situation for the United States, it's through the roof at all-time highs, and that makes no difference to banks because they're still going to craft products and services that are debt heavy to the American public, and they're still going to make insane profits. So Citigroup said the same thing, cautioned that the bank's credit card spending volume fell from the previous quarter. Now, think about that. From a shareholder, stakeholder, investor standpoint, if you're with the bank, you're like, man, we're making money in this area. And if the volume is falling, that means our profits are going to fall. But at the same time, doesn't that mean that the U.S. population, if they're using less credit, it's also bolstering and helping the household economic status? So it's kind of a double-edged sword there. On the one end, people are looking at profits from the big banks. On the other end, as the U.S. spirals more and more into 2024, very, very debt heavy. That's going to come to a bubble. That's going to come to a head. Defaults are going to happen. Just you wait. Now, I'm not saying I want defaults to happen. I'm not saying that's going to be a great thing, but I am going to tell you on record, from an investment standpoint, when you have defaults at a higher level of these defaults, then there's opportunity. And so specifically, you guys know I operate in 3 buckets. I'll be keeping my eyes on the real estate bucket as well, and seeing where you can snag some opportunities there. If it takes a little longer for the Feds to hit that 2% target, then you're going to see the credit crunch really impact the American public. Inflation readings come after strong jobs report. Following last week's job report showing employers added more jobs than expected in December, investors will be closely watching inflation data due Thursday with the release of obviously CPI, and then Friday we got PPI. Consumer inflation has been declining steadily since its surge in 2022, but still remains higher than the Federal Reserve's target of 2%. CPI slowed to an annual rate of 3.1 in November, whereas the personal consumption expenditures, the PCE price index, this is the Fed's preferred inflation measure. It eased to about 2.6. All right, so the Feds are really watching PCE price index, the numbers there, to kind of gauge the efficacy of their actions. Higher than expected inflation reading from December could rise worries about that the Fed hasn't brought inflation under control, despite rising interest rates to 22-year highs. A lower inflation number, on the other hand, could boost confidence that the Fed will follow through with rate cuts later this year. All right, and we're all looking forward to that. That's a nice signal. Now, if they don't, then obviously you're going to see this crunch and pinch a little longer. While inflation has been trending lower, there are signals that the growth in prices may not cool as fast as Fed officials think. The latest job report showed that wages grew 4.1 year over year, higher than expected and above pre-pandemic levels, raising worries that prices could remain elevated. All right. So let's talk about earnings. Well, this is a financial heavy week, right? We've got, obviously we talked about it, BlackRock, Citigroup, you got Citi, Bank of New York, JP, a couple of them, but you have some other notable reports that's coming out this week. So if you'd like to take some swings, I'll be releasing that inside of the private Swings channel. The Swings channel has been on fire, absolute fire. Those of you guys who've taken the swing training, man, it's just incredible how it's been working. So happy about that. I'm going to really be focused on the financial sector this week and CPI and PPI. Okay, so let's talk about some earnings spotlight. And before we get into a little bit more of the levels, so you can understand, maybe get some setups if you're trading stocks, if you're trying to take some longer positions, maybe some leaps or some options. Okay, first let's go over Delta. All right, so Delta had a steady ascent on the price charts in the final 3 months of 2023, climbing 9%. Crazy on a total return basis, right? Though this was slightly below the S&P's 11.7 return. So you threw your money into the S&P last year, then you got a nice return. Analysts see even more upside for the industrial stock going forward, with the average price target of $52.40. Overall, the street gives Delta upside nearly 34% over the next 12 months or so. Now, that's incredible. So just keep that in mind, okay? Off the price charts, analysts think that Delta will post mixed Q4 results when it reports ahead of Friday's open, while revenue is expected to improve 10.3 year over year to about $13.6 billion. Earnings are forecasted to fall 21.6 to about $1.16 off the current price there. Delta recently reiterated that the Q4 guidance, despite the Tel Aviv capacity removal impact not being reflected in the original guide. As a result of this and lower fuel forecasts, analysts anticipates the air carrier again will report below average earnings per share. So what are we saying? There are some external factors that's impacting for Q4 reporting. We could see a slide of about $1.10. However, overall, analysts, the street, everyone really has a strong hold and buy, gives the stock an above average consensus with a target of 55. So overall, I like Delta and I like the hold on Delta. So let's take a look at Delta and see where we are and kind of where it can end up. All right, so here's Delta here on the daily, and what we're saying is we're expecting about I'd say a buck or so, maybe as much as $3 on a pullback on Delta here. But there's a considerable amount of buy volume here on the daily. Now, be cognizant that, yes, you do have a gap down here at about $35. I'm not too concerned with that right now. All of this is predicated on positive earnings. Keep that in mind, okay? No global events. Now, I will say this. We do have some issues with Boeing's 737 Supermax, Boeing 737 Max 9, and some other things that have come up in the news and the media. So barring any of that data, any tragedy, anything like that, I foresee just a solid pullback on Delta with a hold in this area of about $2 or $3. Let's take a look at the weekly. And once we get that, if this is under the POC, yeah, it is. So right here around that 39, 38, this area right here, this is where I'd like to see a pullback happen with Delta. And once I see that there, this would be a good opportunity to load up on a position, right, and let this thing rip. I want to see us hold here and kind of just above the POC here, above that $40.13, and then make its way up. I've got a target personally myself of about $54 on Delta to the backside of the year. I think we hit it, so that's a good long hold there. I like Delta. I'm with it. All right, let's keep it moving from Delta. We'll go to Wells Fargo. This is our earnings spotlight for Wells Fargo. A busy stretch of bank earnings starts next Friday. That's this Friday, right? With Wells Fargo among those set to report. Now, specifically, Wells Fargo will disclose the fourth quarter results ahead of the open on the 12th. As a group, analysts are expecting Wells Fargo to report a $1.22 increase per share on revenue of about $20.3 billion. The financial stock turned into a stellar performance on the price charts in Q4, surging 21.5 on the total return versus the S&P 11.7. Everybody has it at a hold. Some have it at a buy, have it at a hold in general. It says that the rally is reasonable as interest rates fall and recession odds decrease. As for Wells Fargo's fourth quarter results, analysts are watching figures on the bank's commercial real estate office loans department, and is more that area is more exposed than its large bank peers, and clear credit deterioration has been identified as in recent quarters, for further degradation expected in Q4. Looking ahead, though, the analysts' expectations for credit quality in 2024-2025 have improved, as a lower expected rate environment should lead to fewer defaults, given more manageable debt payments. Again, debt is the name of the game as it pertains to the financial sector for the rest of the year, managing that debt and how they're going to continue to profit and balance that out. So let's take a look at Wells Fargo and see what the setup looks like. So here we go. Wells Fargo's holding nicely at about $49.50 here. I am cognizant of the gap here down at $47.83. I'd love for it to be filled, but we are positioned very nicely to come up, and I'm looking for a 10-point move. So I like Wells Fargo. I like the hold. We did get a nice little pullback there. So going into the week, over the next, I would say 2 weeks or so, maybe 3, I think Wells Fargo takes out that 58.50 area, 57.80 area, and hits our target here. So Wells Fargo is good to go for me. I like it. I'm in it. I'll continue to hold that and build on that position even more so on the stock side. And then if I see a nice little pullback down here, I'll dollar cost average for my stock, and then I'll grab some long-term options, longer dated options here to take out this target here of about 58.33 and go to the bank. All right. So that's Wells Fargo. All right, so let's take a look at our levels, and we're going to take a look at the futures levels here. You'll translate them on your own to SPX SPY or wherever else in the market, and we're going to look at the setups now. All right, so let's go ahead and take a look at the futures. Obviously, the futures are running right now. Here are my levels. We won't go over the plan just yet. I'll go over the plan in one moment, but here are the levels so that you can take a look at. To the downside, we're looking at that 4,700. That area there's an area of interest sitting down there. If you don't know what an area of interest is, go through my videos, look at how to trade with an area of interest, or you can click the link attached to the video here. You can take my setup. It's a bite-sized training on trading with areas of interest, okay? Anybody can take the setups. You can learn something there, and you can dominate. People swear by these setups. I do as well. Very profitable. Trust me. All right. So second here is about that 4734 area. I can clearly see volume shifting in that area, and I will be looking. This is a key area for volume to shift. 4755.50, this area here is my major area to see whether or not buyers step in to push this thing even higher. I think we start, this will be my range, and we start to just chip in this area here. The overall range, 4771.25 down to 4700, this area here, and then the tighter range would be 4755.50 down to this 4734.25. I will trade for and against these areas, but I'm going to bring on my VVP indicator along with the volume profile by the Wealth Wells, and I'm going to discuss with you how I plan to trade this area in a minute when we discuss our trade plan. All right, so that's the key levels. Let's get down here and talk about my favorite part. What are people saying about KD? What sets this Discord, my community, my training, me, what sets me apart? There's a lot of fakers. There's a lot of scammers. There's a lot of people popping up overnight saying, hey, follow me. A broken clock is right twice a day. But it's very difficult to be consistent to the tune of over 90% while trading in front of thousands of people, while training people and helping them to understand what to do and talking you through the trade. Come on, you can't fake that stuff. You don't have to take it from me. You can take it from others. Here we go. So Chris 302 says, I work at a big corporation and decided to find a way to escape the corporate grind by becoming a trader. The first 10 months, I was very inconsistent. I lost a good amount of money and was about to give up on trading. I stumbled on KD's YouTube videos around September and finally decided to pull the trigger and join the Killer Wells. That's our Tier 3 access. It is a paid access, and it's for those who are serious about trading and want a little more connected and trained access with me. He says, I quickly noticed the consistency that the members, not KD, not only me, the members were having, so I decided to invest in myself and took the first 2 courses, link below for courses, in November. Since then, I've taken up to course 5, as well as 2 of KD's setups in his area of interest training. Interesting. After the first 2 courses, I started having more consistency. Although my wins were not very large. Don't worry, we take care of that later. We need to get you consistent first. He continues, however, over the past month and a half, not only have I been consistent, but my wins continue to get larger and losses are controlled. Interesting. But more importantly, my confidence has grown. I've had losing trades, but not a losing week. Interesting. Since I've started working with KD. I look forward to working with KD over the next few months, and I am very excited and expect to reach my monthly earning goals. If anyone is looking for consistency and wants to learn the correct way to trade, I highly recommend KD's VVP method. Not only are the trainings fantastic, but the extra insight and teaching that he provides on a daily basis in the Killer Wells chat is amazing. His words, not mine, y'all. KD comes off more as a college professor who enjoys teaching opposed to other discourse where there is not much value. Thank you for that. Now, I will say this. If you are a jabroni, a disruptor, or you flat out get on my nerves, I'm going to kick you out my Discord. So I want to tell you, anybody that's saying, okay, I'm going to come in and test, don't even try it. It's not even going to work. It won't disrupt my money. It'll only disrupt you. So we've got some solid people in here getting trained and getting after this thing. Appreciate the testimonial, Chris. Keep cooking, man. All right. What do you have to help you? We've got the VVP indicator. It's my own indicator with proprietary levels, benefits are. It gives you the understanding of how I trade and gives you the levels in addition to your own. It works very hand in glove with training, and it really eases your ability to read the market, right? Signals, areas of interest is the better way to trade. And I've got my very own volume profile, double-sided here that shows me buy-sell pressure so I can understand what I need to do and how strong the move is when I take the trade. All right. What free training do you have available to you? I've got a number of trainings in my YouTube channel. One video you should watch, enough is enough. When do you just stop trading? When do you just wrap it up? When it's not for you? How do you know? I got a video for that. And then, has he really developed people that have made six figures in a month, 100 grand, on track to do $1.2 million a year? Yes, right? Go watch this video right here. The community creates 100K earners, the blueprint. We talked with Geo for that one. We talked with Mr. Options 1 last week. We talked with Tweeby as well. All of these are recorded. They're live, real people, and talking about the success, help you with market awareness, skill development, reaction times, patience, all the things you need to be a good trader. All right, let's get to the trade plan and see what we're going to do. Let's bring in the VVP indicator here. All right, areas of interest about, and you can clearly see it agrees with my levels. When I have agreement like that, my confidence is through the roof. All right, so when I'm looking at the market, I know that Thursday, Friday, coupled with earnings, will bring some volatility into the market for me. All right, so VIX left off Friday somewhere around 13.3, right? I believe I have to find out what foreign markets are going to do, right, in the overnight session. So we'll talk about that in the morning with the prep with those inside the Discord. However, I got a lot of sell volume sitting here up in this area here. So this is all going to be based on how foreign markets kind of close and whether or not there's a pump there. And we've got CPI timidity. So I think that we just stay inside of this kind of a, I don't want to call it a channel, but this little range here, and we trade. And what I plan to do is just trade off of these levels here, the VVP levels 474,150, and then this 4727, in addition to the levels that I mentioned there. To the apex, I'm looking at 4755. Over the overnight session, let's say we come into these areas and I start to see some weakness, certainly at 4755. I am shorting this thing. I'm going to get a great entry to write this thing down into the open. That's the goal here. Come the open, if the open comes around here and I notice that, you know, we're just sitting around the same area that we opened up here, I'm going to be inclined to be risk off a little bit and watch VIX to tell me, and VIX futures to tell me if we're going to get some type of hedging or if the market is going to move out this area until CPI and PPI. That's the plan. All right. Now, I'll tighten up the plan in the morning, guys. All right. Your levels should match here. And of course, we're looking at the area of interest here. This little green area down here, again, this indicator, this is the volume profile by the Wealth Wells. You can get the link. You can get it from the link below. And this is the VVP indicator with these shaded areas and lines and dotted lines, all that stuff. This stuff means something. This is an area of interest right here. And I'm telling you, this represents buyers coming into the market. And when it switches, then I know that, quote unquote, the floor is pulled, the rug is pulled, and I can go ahead and short this thing or puts or whatever you want to do to the downside. Until that happens, I've got to look at the buy-sell volume here and here and watch that change. Now, what will help you? Well, if you get to training 4 and 4.5, you understand my system to reading the tape. All right, you have to have a 1, 2, 3, 4-step system for reading the tape. I've got it. It's gold. You got to take that training, and you'll understand kind of where you want to go. Okay, so we've talked about market moving events. We talked about the levels. We talked about the trading plan. We talked about what people are saying about me in this Discord. And we talked about the training. Man, what tools do you have? 90-day day trading journal. There's a link down below to get that. You have a full-time job. I have 4 setups. They are like money, baby. You can take them to the bank. They're inside the book. And I've done video training there that you can get with the book to take your trading to the next level. And I've got the indicators. I try to make it as straightforward. It's basically KD in a box, the volume profile, and the VVP indicator to help you get to the next level. That's it. We're going to have an awesome week. I'm going to leave you with this quote. The person who sweats more in training bleeds less in war. That's a grand special from you guys, one of our moderators and traders extraordinaire. And I agree with that. If you put the work in, you're going to crush this thing. TheWealthWellsTraining.com. Get the training that you need. If you show up, you'll go up. KD for the Wealth Wells, signing out.